So you probably heard, build your business credit and your personal credit won't matter anymore. This is another one of the biggest misconceptions I've seen in 15 plus years of banking and financial services. In many cases, people are taught or believe that if they build their business credit up enough that they can completely omit their personal credit and their personal credit conditions. Nothing can be further from the truth. For many startups and small businesses, personal credit actually matters much more than business credit in many cases. I'm going to explain why. I'm going to explain when business credit does matter. And I'm going to break down how banks and lenders actually evaluate your application. So welcome to the invitation, where I'm going to be your business banker and your capital strategist going forward. So the first thing we need to do is demystify the biggest myth in the room. Many people are taught business credit replaces personal credit. This is what many entrepreneurs are taught or believe. Explain the difference in your mind. Okay, just take a quick second and explain the difference in your mind. If you are a small business owner, a startup, or what I like to describe as a closely held business, personally, you are the biggest single factor in that business. When a bank is underwriting your application, they are evaluating that business based on you operating it. So you as a small business owner or a startup, and for those of you who need some kind of tangible range to understand where you fall, consider yourself anywhere from 0 to about $1 million in revenue. You are likely still a small business or startup. That number can grow in the category of small businesses, but in the eyes of an underwriter for business lending, that's a big threshold that you can kind of hang your hat on. Around 0 to completely baseline to $1 million in revenue, this video, business credit versus personal credit, is the most applicable. You are the lifeblood of your business. To give you a better example, an extreme one, Jeff Bezos and Amazon, if that man gets, heavens forbid, gets hit by a bus tomorrow, Amazon is going to operate like nothing happened, literally. If you get hit by a bus tomorrow and you're operating a food truck, or you're running a restaurant, you're running a plumbing business that you are the primary person in, that business is likely going to cease if it survives at all, or it's going to cease. So the bank is evaluating that. The business is not at a scale and size where it has the structure, systems, and processes in place to operate on its own. When I'm lending to you as a business, as a financial institution, as you as a business entrepreneur, I have to look for some type of collateral. I have to underwrite against something that I can be certain is possible on. Something happening to you as a business owner is essential to a small business. A large conglomerate, or Amazon or Walmart and Apple, those CEOs, business owners, and whatever, they get knocked off, a plane crashes, heavens forbid, whatever the case may be, that business is highly likely going to continue to run and replace its lost people and keep going. You and your small business as an entrepreneur are probably not the same. That's the basic framework as to why this is so important. Let me know in the comment section if that makes sense, and then we're going to move forward. So why personal credit matters more. So I can break this down again. For many products, lenders are evaluating the following: your willingness to repay, credit history, your ability to repay, income and cash flow, your overall financial management. A personal guarantee often means the owner's credit profile remains central to the decision. You will be personally guaranteeing if your business is under, most likely around 5 years old, and has not been making well over $1 million to $10 million in revenue consistently with several different owners and many other systems and processes in place. You are likely still a very, very owner-dependent small business, okay? When business credit does still matter, I want to be fair, just like in my last video, I don't want to bash or omit business credit, let's be fair. But business credit becomes increasingly valuable as the business grows, okay? So an example is vendor accounts, which is more like business to business. Net 30 relationships, oftentimes business to business. Certain commercial credit products. This is going to be the commercial division of your small, local, regional, or national bank. High revenue businesses. And again, we're talking 7 figures and up. Large commercial lending relationships. Likely deep 7 figures to 8 figures in revenue and up for years, by the way. Most of you watching this content, myself included, we don't have something that's going upper 7 to 8 figures a year. Not yet. So that means you fall in this category where personal credit is actually paramount still to lending decisions, okay? So products where personal credit often carries more weight. Watch how this list plays out because it's likely products you're probably applying for, okay? Small business loans, business credit cards, startup financing, working capital loans, equipment financing, especially if you're a newer business, lines of credit with a personal guarantee, which is the vast majority of brick and mortar institutions. Those are all the lending products the vast majority of us as entrepreneurs and small business owners are going for in our early years. All of them are requiring a personal guarantor and will absolutely require you to have respectable levels of personal credit and a great credit profile, a decent credit profile, okay? Products where business credit can play a bigger role. Let's talk about that for a second. Established commercial lines, vendor financing, trade credit, corporate cards, or qualified businesses, okay? For qualified businesses, rather. Large commercial relationships with strong financials. This is where business credit can kick in because now the business is functioning like an entity of its own despite changes in ownership. They don't have to hang their hats and underwrite on the owners of the business nearly as much because the business has built up enough structure. It has demonstrated over years of history and financials that it can stand up on its own, even with changes in leadership. That's the difference. Okay, so business credit is extremely relevant when you get to scale. All right. So the real goal, don't ask yourself which credit matters. That's one of the things that's costing you time and capital. All right. How you want to approach this is how do I become a lower risk or the lowest possible risk borrower to the bank? That's what you're striving to achieve. So let's talk about what that looks like to the best of your ability. All right. This is going to include the following: strong personal credit, healthy business credit, consistent cash flow, time in business, deposit relationships, huge. Put an asterisk next to that one. Financial statements, industry stability, which is something that partially isn't even dependent on you. You're in the transportation industry, and for whatever reason, that industry is struggling. Gas prices are through the roof, and that industry is struggling. Your business could be doing fine, but the industry as a whole, which is the bank is considering, the lender's considering, is shaky. So there's factors well beyond business credit. And I'm using these early videos to lay that foundation because I think that's one of the biggest things I have to dispel to get you on the right track to consistent approvals with banks and lenders, okay? So the strongest businesses don't choose between personal and business credit. They build both, understanding what they're trying to apply for, who they're trying to apply for it through, and what they're looking at, of course, because lenders don't approve businesses based on one number. It's not going to happen. That approved business or the approved businesses that consistently demonstrate they can manage money and repay debt. And the metrics that they're looking at are relatively robust and vast, as I just went over earlier in the video. So what I want you to do down below is comment the full picture. Comment full picture down below because that is what the bank and most lenders and a majority of the valuable lending products you're applying for, that is what the underwriting is going to be looking for. The full picture. So think about it. Personal credit, business credit, revenues, collateral, etc. These are deposit relationships. These are going to be the things the majority of quality term lending products are going to be looking for. All right. So comment full picture down below. Let me know you stayed all the way through this relatively short but powerfully packed video with the information that you got this, you understand what I'm saying, and this makes sense. Comment down below and let me know questions or misconceptions or, clarity you may need around a business personal credit conversation because it's extremely important. I know a lot of you have been struggling with this. You've been hearing a lot of mixed signals with, if you've been in this rabbit hole, hundreds if not thousands of videos about this topic. I'm here to demystify it as a banker, a business banker by trade with 15 years in banking and financial services and managing a 7 to 8 figure deposit and lending relationship book of business of small businesses. I am helping people do this every single day. I am the person you walk in and get sat with when you're looking to make these same lending requests. Okay, so this is coming from the horse's mouth other than the underwriter themselves. So comment down below with any questions, confusions, or anything else that I can clarify for you. We're going to continue to pound these videos out and get a lot of these misconceptions out of the way before we start building what to do going forward. So comment down below. Other than that, like, comment, share, subscribe. Welcome to the invitation where I'm going to be breaking down business banking, business lending, and capital strategy all throughout this channel. So welcome in, get in the description section, the about section of the channel down below. I've been running a YouTube channel on finance and banking for years, nearly 1,000 uploads there. But I'm starting to get into my niche because a lot of you as business owners, this is where I need to be because a lot of you need this content. So if you want to learn more about me, get in the about section, get in the description section. This channel is actually named after my book that I wrote on these very topics. So that's how far into this I am. You can get in the description section to check out my book down below. Other than that, I want each and every one of you to stay focused, stay in motion, and I'll see y'all soon.